Hi there, I have good news for JD shareholders and for new investors. As you can see, the stock price went up 17% in just one day. And I think you already know why that happened. Because JD reported the results for the full year 2023 and they were great. The net income was about 3.4 billion and their free cash flow about 5.7 billion. And now the market cap is about 40 billion and the price to earnings about 12. Now the question is still JD a buy, a great investment at the current price, even though the stock price went up 15%? Well, as I said at the beginning, I also have good news for new investors. The stock price of JD is still cheap at the current level, quite cheap. You only have to look at their free cash flow, 5.7 billion, and their market cap, plus their future opportunities, and you can easily see that the stock price is undervalued. Moreover, there are other catalysts that will make the stock price go even higher than $24 or $25 per share. And let me show you why. First of all, as I said, the revenue has increased a little by 3.6% in the fourth quarter compared to 2022, and for the full year, the revenue has increased by 3.7%. So this is good. Compared to their size, this is quite good. And their earnings, as I said, have improved a lot. They doubled their earnings. They reported a profit of about 3.4 billion. You can see that in 2022 they had about 10 billion renminbi, and in 2023 they had 24.2 billion renminbi. So they doubled their earnings, and that's why the stock price went up 14% in just one day. Now maybe the stock price will go up even more, but maybe it will decline a little, because as you can see, after hours the stock price is expected to decline about 2.7%. That may happen. But what's important is their fundamentals. If they keep improving their earnings, they report higher and higher profits in the future, and the free cash flow grows even more, then you can see that it's possible the stock price to go up a lot. 17% in just one day. And this will happen again in the future when JD reports more earnings, higher than expected. Now, the next catalyst is their dividend. They announced that they will pay about 1.2 billion in dividends, or $76 per share. This means that the dividend at the current price is about 3%. So dividend yield of 3%. That's quite good. Because you have this dividend of 3% plus the upside in the stock price. Because as JD is so cheap and their free cash flow is about 5.7 billion and it keeps growing, you also have the upside in the stock price. Plus, there is more, and let me show you what. The next thing is their share repurchase program. For 2023, they used of about 350 million for buybacks, and now they want to use about 3 billion over the next 36 months from March 2027. So in the next 3 years, they want to do about 3 billion in buybacks. This means if they do buybacks at the current level, at the current stock price of $25, your return only from buybacks will be around 7.6%. So you have the dividend yield of about 3% plus 7.6% from buybacks, if the stock price stays low for a longer period, for the next 2 years maybe. That will be great for you, especially for investors. So in total, your return only from dividends and buybacks will be about 10.6%. Of course, if the stock price goes down even more and their earnings and free cash flow go up, then they can increase this amount to 6 billion maybe, or even more. So your return is about 10% only from dividends and buybacks. Plus, as I said, there is the upside in the stock price. As they are making 5.7 billion in free cash flow, as you can see here, JD at the current level is undervalued, as the market cap is about 40 billion. If they keep growing, then the stock price can easily double from the current level. Quite easily. Of course, I also said in the past, I made more videos about JD, that the stock price is traded below the cash on hand, and it's a great opportunity. And as you can see, as they reported an increase in their earnings, the stock price went up quite a lot, 16%. And this will happen again in the future, when they'll increase their growth rate. They'll report higher earnings and free cash flow. And JD is a company that I analyzed on my research platform, where my subscribers have access to those valuations. They know when to buy and when to sell. When is the right moment to invest in undervalued stocks. As you can see, the fair value may be about 64 billion. And now the market cap is around 39 billion. So my subscribers have a margin of safety. And they know that JD was and is a great investment at the current level. You can also see the fair value per share. $41, the fair value, and the price is about $25. As they have access to more businesses like this, where they have a margin of safety, they can take advantage, choose whatever they like, and invest in those companies with a margin of safety. And then, when the earnings go up, they have a great return, 15% in just one day. So this research platform gives investors access to more undervalued businesses that can go up a lot. And if you are serious, you can join me. You can send me an email or see the video description. Now, let's continue with JD, because this is an undervalued stock, and you might want to take advantage if you like their business model. Now, as I said, buybacks, dividends, that's great for the current shareholders. Moreover, if you look at the highlights, you can see that the company achieved new records in transaction value and order volume, and of course number of users, and this is great. Plus, their pharmacy, JD Health, is focusing on omni-channel offerings, and as you probably know, China has over 1 billion people, so this segment, JD Health, has a lot of opportunities ahead. Just compared the current valuation of JD of about 40 billion with CVS, a US pharmacy company, which has a market cap of about 93 billion. So in the US, there are more than 300 million people, but in China, there are over 1 billion. And JD can grow a lot in the future only from this segment, JD Health, their pharmacy. You can see the difference. The current market cap of JD is about 40 billion and CVS 93 billion. So at first glance, this segment, JD Health, has a lot of opportunities. Now, the next segment is JD Logistics, which helps more Chinese brands to go overseas. And they also have global customers, especially in Europe. So as you can see, JD has a lot of opportunities. JD Retail in China, JD Health, which can grow a lot in the future, and JD Logistics, that offers its services internationally. And of course, the retail segment may expand in other countries, overseas. That can also happen. And if they announce that, a new platform, then that will be a plus for the current shareholders and of course the new investors that want to take advantage of this company. So you have the fundamentals, dividends, buybacks, free cash flow, plus new opportunities, so that this business can grow even more in the future. Now, another thing you have to know is their cash on hand. If you look at their balance sheet, you can see that they have 10 billion in cash and cash equivalents, 1 billion in restricted cash, so in total 11 billion, plus short-term investments of about 16.6 billion, so in total 27.6 billion. And of course, if you add their securities and other investments, their cash goes to 37.9 billion. And of course, they also have other investments of about 8 billion. So in total, JD has about 45 billion in cash and investments. 45 billion. Keep in mind this number. And you look at the current market cap of 39 billion, the stock price is traded below their cash on hand and investments. And that's great. Of course, JD also has some debt. If you look, the long-term debt is about 4.4 billion and the short-term 700 million. So if you subtract their current debt, their net cash position may be around 40 billion. And still you have the market cap of about 39 billion in cash on their balance sheet. And that's quite great. So when you look at JD, you can easily see that it's undervalued. Traded below the cash on hand, they have more opportunities ahead to grow their business, to improve their earnings and free cash flow. Plus, you have a dividend of about 3% and buybacks. So the current level JD is a bargain. And that's why on my research platform, JD has a good margin of safety that investors can take advantage. And of course, if they grow even more in the future, they can improve their free cash flow, then this valuation may be even higher. The market cap can go to 100 billion. That can also happen, or even more in the next 5 to 10 years. But of course, you have to ask the question, how much can JD grow in the future? As I said, they have retail China, pharmacy, the health segment, and logistics. So all of those segments have a lot of opportunities ahead. And JD is able to increase their earnings and revenue more in the future. And if that happens, you can see what the stock price does in just one day. Up 15%. So if you like this business, you can take advantage. And if you don't like this business, on my research platform, you can find better ideas. And if you have other questions, please let me know in the comments.